What is going on, YouTube? Hope everyone's been having an absolutely amazing start to the trading week. We're now at Wednesday, and I hope everybody's been able to take some lovely profits, or even if you've taken some losses, let's just hope that every single person has followed their plan consistently. I know I have every single day, and that's what makes me and so many other traders successful traders. Okay? We always get told to follow our plan, but what happens if we're following our plan completely, but we're still not seeing the results that we want? So, in today's video, I want to talk to you guys about a few secrets that I learned along the way that was able to completely change the game for me in my trading. Just a few small tweaks can have the biggest impact, like you would not believe. Okay, and before we get started, I just wanted to make a note to you guys that I haven't gone through any price data. I haven't cherry picked any pieces of the chart to show you that these things work. This is more so for you guys to take what I'm saying, okay, and then to go into your own chart work and see if these things work for you. But take this, guys. I wouldn't be telling you these things if I didn't know that they worked myself. Okay, and when you actually hear them, it's going to make some sense to you. Okay, so without further ado, let's begin. So, one of the first secrets that I started to notice, which was really holding my trading back, was that I wasn't waiting for a reaction at a key level. And what I mean by this is for example, if we take an example like this, okay, where let's say I'm waiting for price to get to this level for a nice retest. I wasn't waiting to see how price would react to this level, right, before taking a trade. So what I would essentially do is take the trade, and what would also happen is that it would kind of just, go to the downside, take me out for a stop loss. It would act a bit silly and then basically break down. But when I took the time to pause and see that price would like to sort of wait a little bit and then push off from these levels more often than not, then why don't I just wait for them? I mean, are there going to be times where price will come back in, tap into this key level, and then just smash the upside? Of course there is. But there's also times where price will stop you out before going up. So wait for that reaction, right? And then you're able to not only place a more accurate trade, but you can put your stop loss, okay, in a better place. So we've kind of got two things in one. Okay, so we've got waiting for a reaction at a key level and also stop loss placement. Okay, and these two can kind of intertwine with each other. Okay, but I'll just finish talking about the first point because I've just seen this bit of information by here. Okay, let's look at this scenario. Okay, I'm only choosing this because I've just seen it. Okay, how do we know? Because I guess if we use bar replay, we could probably see. Sometimes even on bar replay doesn't give you an accurate description, but who's to say that we put our trade like this, we can see the price is bouncing up and down, making high highs and high lows. Let's say we go by here. Who's to say that price didn't come and tap in by here, come up, and then boom, smash back down? So we obviously don't know what happened. It's more likely that price just came crashing down and didn't even give us an entry. But situations like this do happen, and they happen to me quite a lot. So when I took the time out, okay, to see something like this, which I just very cleanly saw, right? We can see that price has reacted to that key level not once but twice, and now this is giving you good indication that you can, this is a safe level. You can probably put your stop loss behind by here instead of putting it way up here behind this structure by there. You can place a more accurate trade that price is going to go down, and if you really wanted to, you could also improve your stop loss placement. So again, this would be a live paper trade, but this is exactly what I'm talking about. But it doesn't just go for entries as well, guys. It can also go for when you get to key levels at higher time frames. Let me just pause this and go somewhere else. If we're basically looking for price to, maybe you wanted to see if price wanted to react to this key level, this is perfectly within your plan. Instead of just taking buys instantly when you get to that hourly key level, you will be able to see, okay, let me see what the 1H wants to do. Okay, and as you can see, it just bursts through, right? An example of where, waiting for this reaction will give you something what you want is maybe something like this, where you can see that price has reacted, it hasn't broken down, it's giving you a little bounce. Now this gives you much more credence that price is going to basically bounce in your direction. So I promise you guys, if you focus on waiting for a reaction at a key level, for whatever reason that is, just waiting for some kind of reaction, go and test it out, see if it saves you from some losses, okay? The next point is stop loss placement. We just briefly spoke about it there, but let's go ahead and look at an entry, right? And look at some kind of a stop loss placement. What looks like a good stop loss placement versus a really bad stop loss placement. Right then, let's say for whatever reason now, we want to take trade off this key level. This looks like a good example to use, okay? Let's say that and by the way, guys, I'm not just showing you examples that work. I'm simply just seeing examples where I can illustrate it on the chart. If they do work, fantastic, but don't be discouraged if we go through an example and these fake trades just hit stop loss, okay? I'm not trying to just cherry pick. I'm not trying to just show you things that win. I'm just trying to illustrate to you the things that I'm speaking about, and I'm telling you they do work, but please go and do your own testing. Okay, so let's say we want to take a retest by here. Okay, this, in my opinion, would be a really bad stop loss placement because, look, you've got no room to breathe. It's so, at this point, it's just, I don't know, like, clearly it just seems very, very risky for no reason. And the reason I would take these kind of trades is because look at the risk to reward. Like, we're going to go 3 pips and hit a 3R trade, right? We could go and get a 10R trade, which is only like, 13 pips or something like that, right? So this was very attractive to me, but I was finding that I was actually, even though I had a few massive wins, I was actually over time taking way more losses than I was winning, and it just meant that it didn't work out for me. So there's 2 things that you can do to improve your stop loss placement. We talked about it previously. If you're looking to trade off a key level, just wait for some reasonable evidence to suggest that price will hold at this level. If price is coming to this level and it's giving you reasons that it's going to respect it, then of course you can probably put your stop loss at a place like that. Okay, maybe put your entry a bit higher. Something like this looks much more reasonable. But if you wanted to just take that trade and you expected price was just going to simply bounce straight off, where is the safest place to put our stop loss in this scenario? Right, let me show you. When we're trending upwards, okay, we always want to put it behind the previous higher low. Why? This level by here. Why do you want to put it by there? Because if price was to come out and take you out, then you know that you were just simply wrong about the trade. It's in the safest place. Okay, granted that we can see by here, prices, trending up and made a new high, low, made a new high. So this is our higher low. And whilst the risk reward might be a bit bigger, I can guarantee you that you go for a 1-to-1 or go for a 1-to-2, you're going to start hitting some really good trades. And what you also don't fall victim to, which I used to do this quite a lot, is that if my trade got taken out by here, for whatever reason, price came out, wicked it by there, I'd say, okay, that's fine. Price is just telling me where it really wants to go. Okay, so let me extend my stop loss by there, and then boom, guess what? It would come back and then wick me out again. And I'm thinking, okay, fine, it's giving me 2 losses. I got one more try now, boom. And then what happens? It comes out and wicks me again, right? Whereas if you would simply just put your stop loss by here, then if price comes and takes you out, more than likely it's going to, if it closes by here, breaks past this level, you know that you were just completely wrong about the trade. Sorry, about the direction, right? But if it came by, say, here, okay, and then it just wicks you out, you've got one more try. And then if it, more than likely it's going to bounce off this level. This is like the final level where price can bounce if your overall direction is good, okay? And just to, finish off, if you are in a downtrend, obviously the opposite is true. You want to put it behind the previous lower high, okay, oops-a-daisy, which is by there, okay? Because again, if price comes up by here, then you've got reasonable evidence to suggest that price has broken trends, okay? And I am, just bear in mind, I was in the 5-minute time frame, but these concepts work on all time frames, okay, guys? It's not just, let me go and put that by there so we can just have a look at it whilst on the screen. Yeah, it works for all time frames, okay? So stop loss placement is very, very important, and again, very self-explanatory, but let's go over it. If we're looking at a ranging market, then what we essentially want to do, okay, is just put our stop losses. I would advise if you're going to be trading ranges, okay, then don't be taking trades in the middle by here. Just put your stop loss by there or by there, depending on whether you're buying or you're selling. Okay, hope that makes sense. Right, the next point, which is a bit trickier, which I don't think a lot of traders here really pay attention to. Okay, let me just go ahead and delete everything. Let me close this. Right, okay, and the third point is assessing the current state of price before entering trades. Okay, this was something that would catch me out so many times. And what do I mean by the current state of price? Well, I just mean like price in its current behavior, current state, whatever you want to word it. The main premise of this is for example, if we are looking to say, for whatever reason, we want to take a sell by here. Okay, let's just go and see price doing its thing. Or better yet, let's say we want to take a sell that's up by here. Okay, right? We've done a bunch of testing. We've seen that this works more often than not. Fine, no problem, no problem. Okay, we want to take our sell by here. So all we're going to do is wait for price to come and smash into there, tap us in, boom, tapped us in, and oh shit, what happened? We took a stop loss. Well, we've kind of got a few things all in one. Okay, we got a good stop loss placement. In some regards, we waited for a reaction at this key level, but what were we missing? Okay, we were missing, right, that price was literally trending upwards as we came into this key level. Okay, so assess the current state of price. When we're looking for a trade, whatever our bias is, does it match up with what price is currently doing? Okay, so if I'm taking sells, has price given me enough evidence, enough criteria, enough confirmation to see that it's going to go down? Am I selling when price is ranging to the upside? I just want to see if price did carry on going. Well, there we go. Perfect example in itself. Pardon me. So that's what you need to see. Also, the current state of price could be, okay, I'm planning a trade, but is price just looking really messy? Okay, let's go ahead and look at an example where price is just looking really, really messy. Okay, let's maybe go to the 15-minute time frame. Okay, let's look at, I don't know, what looks really messy and looks a bit minging. But this looks a bit minging, okay? Like this whole thing looks a bit weird, okay? We don't really know where price is going. Price is kind of trending upwards, we can see we've got this. It's looking like a little bit of a range. Okay, I know price did smash down to the bottom. But it's like, okay, look at this particular area. I know this was like, really late hours in the day. But just before you're taking any trades, just kind of see, okay, what is the 15-minute looking like? What is the 1 hour looking like? Is the 1 hour looking clean? Is the 1 hour looking a bit crap? Is it looking just really congested like this? Sometimes this is within your plan. Sometimes you want to take a trade of this consolidation expecting the bounce upwards. But just as a general rule, okay, you want to be assessing the current state of price before entering trades. Is it looking messy? Is it matching up with my bias? Am I looking for sells when price is making higher highs and higher lows? And when the real key here is when I had everything in correlation with each other, things really started to work out. Okay, the 1 hour is looking pretty good. Okay, it's at this support level, right? Or it's broken above by here. I'm looking to take a trade to the upside. Okay, the 5-minute is looking clean. It's trending upwards. I'm looking to take a buy at a level, say, I don't know, around by here. Let's have a look. Okay, perfect example would have been maybe by there, by here, wherever. So everything's all lining up. Okay, we got the nice 1 hour. We got, we're taking buys. The 5-minute is trending. Let's just be, good. Let's get on with it. Don't know what I was thinking about saying there. So again, you don't want to be taking sells when price is making higher highs and higher lows. You don't want to be taking buys when price is making lower lows and lower highs. Very, very simple. Okay. What is the next point that we want to go over? Okie dokie. And this is going to be the last point that I'm going to speak about today, guys. And it is adding to your winners. Okay, this is only something that I've really been taking advantage of quite recently. I was very much the kind of trader who would be 1 win a day, 2 consecutive losses, I'm out. Standard 1 to 3, sometimes 1 to 4. I would look at where the market is, where the structure is on the higher time frames, and look to take my exits at certain key levels. Absolutely nothing wrong with that, right? But I preferred a system where I was taking out, I was able to really capitalize off moves. They always say in trading that there's sort of four things that could happen. You can take a small win, a big win, a small loss, or a big loss. And as long as you eliminate the last one, you're literally fine. You've got a gold mine. So as long as you can eliminate a big loss, you're okay. And I was thinking to myself, sure, I might get like a 1-6 trade, one to here, one to whatever, but it just kind of wasn't working out for me. I don't know why. So what I found a lot of success in, me personally, was adding to my short term, entries, like my 5-minute trades. So if I can see that price is looking, and this is just for me, guys, this is, you can add this a multitude of ways. We'll go over some examples in a minute. But if I'm looking to see price is doing something like this, okay, and I get in on the move around by here, I'm taking a buy by there. I'm taking a buy by here. Okay, I'm taking another buy by there. I'm going to keep on going until it basically tells me that it's had enough, right? And I found in this way, I'm able to make stacks of money. Do you know what I mean? Like, I'm talking big, big money. Or when you get that one good, rise or one good stack, you're laughing, bro. But some people do things a little bit differently. What some people like to do is, and again, you've also got to, I'm going to add in another point by here because you've always got to manage your risk well. Okay, this is also another massive, factor in our trading, which I'll kind of speak about in tandem with adding to your winners. When I spoke about that example, let me see if I can go ahead and get that up there. Okay, fine. Let's just use this, okay, because this is just simple, okay. Delete everything. Okay, so if I'm taking a buy by here, okay, and I'm taking a buy by here, okay, and I'm also taking a buy by here, there is also no certainty that price is going to keep on going up. What if it just goes all the way down, okay, and spunks me out, right? If I haven't had any risk management in place and I've literally just taken a 3R loss when I was probably up like 4R, 5R. So what I personally do is, okay, is that I will set my trades to break even when price will break a new level. Okay, so if price breaks above by here and I'm already in the trade, this trade is break even. Okay, I will now go ahead and buy this. Okay, I'm literally still risking only 1R. Okay, if it rises to this new level, boom, I'll set that trade at break even and we keep on going. So essentially my risk is being managed correctly because every time I put a new trade on, right, the previous trades at break even. And sure, do we sometimes get, trades going all the way up and then coming back down for break even, or sometimes taking us out for -1, or, we're getting half the profit that we would have? Of course that's going to happen, but that's expected to happen when you've got a potential for a really high return, because you don't need these situations to happen all the time. You just need them to happen a little bit, a few times. When they do happen, you've got the mental capacity to execute on it. That's the most important thing. However, there are different ways you can add to your winners. Some people may, for example, see that, okay, price is rising. Okay, it's literally rising. This is exactly what I'm seeing. All the criteria is, lining up. I'll take another buy. Okay, it's broken out again. Let me take another buy. Okay, let me go ahead and take another buy. Some people do this. I know people that literally just boom, 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 buy, 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 buy. Okay, and what they'll do is they'll set trading stops. They'll set, stop losses. They'll put, their trades to break even. So whatever works for yourself, whatever you want to do, and that works well, then go ahead and do it. So let's just focus again. Recap. Waiting for a reaction at a key level, whether that's a higher time frame key level or an entry. Make sure that we're not blindly taking trades at random levels without any kind of confirmation that price is respecting that level or showing that it's rejecting it. Okay, or it's going to break through. I don't know. Whatever your reaction looks like, make sure you're waiting for one. Stop loss placement. Making sure that we're putting our stop loss in a safe place. In an uptrend, it's always behind the previous high or low, and an uptrend is always behind the previous low or high. However, you can get better risk to rewards if you're putting them at maybe certain retest levels, or certain levels if you basically got the confirmation that price has respected that level. Assessing the current state of price before entering trades. Okay, we're not going to be taking buys when price is clearly trending to the downside. And we're not going to be taking trades in really messy conditions. We want to make sure that everything is lining up and everything makes sense. Adding to your winners. So whenever we got winning days, we're making sure that we're getting really big days. When those days happen. Doesn't always happen. Sometimes it'll be very infrequent. Sometimes you'll be taking little wins or whatever it is. Maybe you'll just stick to your 1 to 3s, 1 to 2s. And then maybe one day you decide you want to start adding to your winners, start stacking positions, doing whatever, and you start taking really big wins. But remember that whenever you are doing any of this, waiting for a reaction, stop loss placement, setting current price, adding to your winners, The key factor to everything is your risk management. Your risk management will save you from downtimes. It will sometimes save you from really bad decisions that you make. Sometimes you look at a trade and think, oh gosh, like, why did I put that trade on? Damn, that was a mistake. Let's just set the trade to break even. Sometimes our mistakes kind of work out for us. As long as we're not making a habit, it's okay if it happens once in a while. Risk management will also save you from bad periods of drawdown and bad market conditions. And if you are looking to do something like this where you're adding to your winners, you got to make sure that you're going to be managing your risk, and you got to be okay with price going against you, taking you out for a small loss, taking you out for break even, and sometimes just leaving a whole lot of money on the table. Because I promise you guys, it's much better to have a little bit of caution than to have a massive amount of regret. Thank you so much for watching, guys. If you've enjoyed the video and you've learned something, please leave a comment, please give me a like, and please subscribe and let me know what kind of videos you want me to do. Okay, do you want me to talk about my trading journey? Do you want me to go over certain trades I've taken? I really enjoy the content I'm putting out now, but whatever you want, guys, just let me know. Okay, I can't wait for this channel to grow. I can't wait to be interacting with many more people. But for now, guys, have an absolutely amazing day, and I hope the trading week is profitable. If not profits, it's profitable in your mentality for sticking to your plan. I'm out. Take care.